Welcome to the Authority Hub podcast. I'm Nolan, joined as always by Claire.
And today we're featuring the expertise of Lucia Gugliuzzi, mortgage broker in Vaughan-Woodbridge, Ontario.
You found the home, you made the offer, it was accepted, and then the bank said no. What do you actually do next?
That moment is where so many buyers in Vaughan-Woodbridge feel completely stuck, and it's exactly the situation Lucia Gugliuzzi works in every day.
So let's set the scene. A self-employed contractor in Woodbridge, strong business, good cash flow, owns the equipment outright, goes to his bank for a purchase mortgage and gets declined.
And the reason isn't that he can't afford the home. The reason is that his reported income, after years of managing deductions the way any smart business owner would, looks much lower on paper than what he actually earns.
The bank's system sees the tax return number, runs the calculation, and produces a decline. The borrower walks away thinking the answer is no.
But what Lucia Gugliuzzi understands, and what she explains to clients in exactly this situation, is that a bank's answer is not the only answer.
That's the core idea we're building this whole episode around. The standard approval process was designed for a specific borrower profile, and a lot of people in Vaughan-Woodbridge simply don't fit it.
Let's talk about why that is, because it's structural, not personal. Standard mortgage qualification is built around T4 employment income, strong credit history, and a straightforward property type.
And when your situation doesn't match that profile exactly, the automated system produces a decline, not because you can't afford the mortgage, but because the model wasn't designed for your circumstances.
Statistics Canada data puts self-employed Canadians at roughly 15% of the workforce. That's a significant share of borrowers whose income structure simply doesn't map cleanly onto standard qualification models.
And in Vaughan-Woodbridge specifically, that number feels even more relevant. The area has a high concentration of self-employed individuals, business owners, and professionals whose income is genuinely different from a T4 arrangement.
So the system isn't broken for everyone, it's just not built for everyone. And that gap is exactly where alternative mortgage financing exists.
Let's define that term clearly, because it gets misunderstood. Alternative mortgage financing refers to lending options outside of Canada's major chartered banks and traditional credit unions.
We're talking about trust companies, monoline lenders, and private lenders, each operating under different regulatory frameworks and different risk tolerances.
And the important thing Lucia Gugliuzzi emphasizes is that this is not a penalty category. It's a structured part of the Canadian mortgage market, designed specifically for borrowers whose situations fall outside what a major bank's automated system will approve.
The regulatory framework in Ontario is administered by FSRA, the Financial Services Regulatory Authority of Ontario, which licenses brokers and sets conduct standards across all lender types. Ontario has more than 15,000 licensed mortgage agents and brokers, which tells you how active this market actually is.
So when a borrower works with Lucia Gugliuzzi, the same professional obligations apply whether the lender is a major bank or a private mortgage company. That consistency matters when you're navigating a more complex file.
Now let's get into the common situations that lead people to this conversation, because most of them are more common than borrowers expect.
Self-employed income is the most frequent starting point, as we described. But credit history is the second most common factor. And this is where a lot of people assume the door is permanently closed when it isn't.
A period of financial difficulty, missed payments, a consumer proposal, a previous bankruptcy, doesn't permanently close the door on homeownership. Alternative lenders look at the full context of a credit file.
How long ago did the event occur? What has happened since? What does the current debt load look like? A borrower who has been managing obligations responsibly after a difficult period is a very different file than the credit score alone might suggest.
Property type is another factor that doesn't get discussed enough. Properties with mixed use, non-standard construction, or title complications can be declined by institutional lenders for reasons entirely unrelated to the borrower's financial strength.
And new Canadians with limited Canadian credit history also frequently benefit from alternative financing. Established income and assets don't always translate into a credit profile that a major bank system recognizes.
So what does Lucia Gugliuzzi actually do differently for these clients? The first thing is lender matching before any application is submitted.
That's a critical point. A broker working across multiple lender tiers, institutional, trust company, monoline, and private, can assess which lender is the right fit before submitting anything.
Because submitting to the wrong lender wastes time and generates unnecessary credit inquiries. Industry estimates suggest each hard credit inquiry can reduce a borrower's score by a small but meaningful margin.
So the matching process isn't just a convenience, it's a practical protection for the borrower's credit profile. And it's something a single lender application process simply cannot offer.
The other thing Lucia Gugliuzzi focuses on heavily is documentation, and this is where borrowers have more control than they often realize.
In alternative lending, documentation is often the primary tool for telling the story that a credit score or tax return alone cannot tell. And having it prepared in advance is the most direct way to move through the process faster.
For alternative and private lenders, the documentation list often extends further than a standard application. Business financial statements, accounts receivable documentation, rental income records, a written explanation of a credit event, all of these may be required.
And here's something that genuinely surprises borrowers. The same income, the same credit history, and the same property can produce a different outcome depending on how the documentation is assembled and presented.
That's not a technicality. It reflects the fact that alternative lenders are doing a more manual review, and the quality of the information they receive shapes the quality of their decision.
Let's talk about private lending specifically, because it's the most flexible and the most misunderstood segment of this market.
Private lenders are typically individuals or investment groups lending their own capital, secured against real property, outside the regulated deposit-taking institution framework. Their qualification criteria can be significantly more flexible because they're not operating under the same capital requirements as banks.
For a borrower in a short-term situation, bridging the gap between properties, consolidating high-interest debt while rebuilding credit, or completing a purchase that a conventional lender declined, a private mortgage can be a practical tool.
The cost is higher than institutional lending. That's the trade-off for the flexibility, and Lucia Gugliuzzi is clear about that from the beginning. The goal in most private mortgage situations is to use it as a bridge, not to stay in that product indefinitely.
That might mean a period of on-time payments rebuilding a credit profile, or a year of documented self-employed income that a traditional lender can then use for qualification down the road.
And all private mortgage transactions arranged through a licensed broker must comply with FSRA disclosure requirements, full disclosure of lender fees, broker fees, and the total cost of borrowing. No surprises at the commitment stage.
Now let's bring this back to refinancing, because this isn't just a conversation for first-time buyers. Lucia Gugliuzzi works with purchase, refinance, and renewal situations, and refinancing through an alternative lender is more accessible than many homeowners expect.
In the Greater Toronto Area, home values have appreciated significantly over the past decade. Many homeowners in Vaughan-Woodbridge carry substantial equity that alternative lenders can work with, even when income or credit criteria fall short of institutional thresholds.
And for borrowers who were declined for a refinance through their existing lender, a decline from one channel doesn't mean the refinance isn't viable. It may mean the file is better suited to a lender with different underwriting criteria.
Alternative lenders who handle refinance applications are often more willing to look at the purpose of the refinance, debt consolidation, property improvement, equity access, as part of their overall assessment.
The strength of the equity position and the borrower's ability to service the new payment are typically the primary factors, rather than a rigid income-to-debt calculation. For borrowers whose debt-to-income ratio is elevated because of the debt they're trying to consolidate, that distinction can make a real difference.
Renewal declines are also worth mentioning specifically, because they've become more common as lender criteria have shifted. If your renewal was declined, the same property and the same payment history may still support a mortgage through a different lender channel.
So let's come back to that contractor in Woodbridge and talk about what actually becomes possible. He comes to Lucia Gugliuzzi after the bank decline. She reviews the full financial picture: income, credit, assets, liabilities, the property.
She identifies that an alternative lender using bank deposit history and business financials, rather than net reported income, can build a more complete and accurate picture of what he actually earns.
The documentation is prepared in advance. The lender is matched before anything is submitted. The application goes to the right channel the first time.
The commitment letter comes back with the loan amount, the term, the payment structure, and the conditions, a property appraisal, updated bank statements. The borrower knows exactly what to expect and exactly what it costs.
And the client closes. The home he found, the one he thought was out of reach after the bank said no, he closes on it.
That's the human stakes of what Lucia Gugliuzzi does in Vaughan-Woodbridge every day. The number on a tax return stops being the barrier it looked like.
The broader truth here is that the right question was never, will I be approved? The right question is, which lender is the right fit for this specific file? That's a question a broker working across multiple lender channels is positioned to answer in a way that a single lender process never can be.
If you're in Vaughan-Woodbridge or the surrounding communities and you're navigating a purchase, a refinance, or a renewal that didn't go the way you expected, this is exactly the kind of situation worth having a direct conversation about.
Lucia Gugliuzzi is a mortgage broker in Vaughan-Woodbridge, Ontario, specializing in residential mortgage broker, purchase, refinance and alternative financing.